Taxation of cryptocurrency. What is cryptocurrency? Well, unless you lived under the rock, you probably know what a snail is. And the sign on the shell of the snail is the Bitcoin, which is a cryptocurrency. But what is crypto? Well, it's a property. Why is it a property? Because IRS says so. According to IRS, for federal tax purposes, digital assets are treated as property. General tax principles applicable to property transactions apply to transactions using digital assets. You may be required to report your digital asset activity on your tax return, according to IRS's website. So, if cryptocurrency is a property, then property has a value, and any value is expressed in dollars. Now, when you buy a property, say a Bitcoin, the price you paid for it is considered your base price. Now, if in the future you sell it, the price that you sold is your sale price, and the difference between your sale and your base is the capital gain, or if Bitcoin goes down, or whatever property you purchased goes down, that's a capital loss. There are two types of capital gains and capital losses, so long-term and short-term. If you kept the asset less than a year, then it's a short-term capital gain or loss. So for instance, you bought a Bitcoin today, you sold it in 20 days. That's a short-term gain or loss. Or if you kept it for more than a year, that's a long-term gain or long-term loss. When it comes to a gain, short-term gains are taxed as ordinary income. So as if you're paid a salary, as if you're paid for certain services you perform. It's considered your employment when you're selling assets quickly. However, if you kept an asset for more than a year, that's considered a long-term investment. And to incentivize long-term investments in stocks, in other property, in cryptocurrency, they're taxed at lower rate. The highest rate long-term capital gain is taxed is 20%. The highest rate short-term capital gain is taxed is 37%. For example, if you bought 5 Bitcoins today, and today the price of a Bitcoin is $20,000, then 20,000 will be your base. Now, you don't have to report anything in your tax return because you haven't realized any gain or loss. However, if 100 days later you sell one of those 5 Bitcoins when the price of Bitcoin is $25,000 and your base was 20,000 because that's how much you paid for it initially, your capital gain will be $5,000, and that must be reported as a short-term capital gain. Now, let's say 500 days later, you sell 2 other Bitcoins when it's $30,000 for a Bitcoin. Your base is still 20. It never changes. Now, your capital gain will be, since there are 2 Bitcoins and proceeds will be $60,000, and for 2 Bitcoins, the base is $40,000, your capital gain will be 20, and that's a long-term capital gain, which will not be taxed at more than 20% at a federal level. Now, what if you don't just buy Bitcoins? What if you're paid in Bitcoins? Well, can you actually get paid in Bitcoins? Yes, you can. Now, unless otherwise agreed, if someone owes you money, it must be paid in dollars, and you can't refuse to accept payment in dollars in the United States because dollar is a legal tender for all debt, private and public, and it says that on the dollar. However, as long as both parties agree, you can pay in anything. So if you want to buy an apple and the seller and the buyer don't object, you can pay in dollars, you can pay in euros, you can pay in gold, you can pay in Bitcoins, you can even pay in candies or seashells, whichever you prefer. Now, if I'm selling you an apple and you give me candies, gold, Bitcoin, foreign currency, or something else, how do I report that? Well, in the eyes of IRS, dollar is the neutral arbiter and not part of the market, which means any value of a payment is expressed in dollars. So I can physically get paid in foreign currency, in gold, in anything else, in Bitcoins, but in the eyes of IRS, I got paid in dollars. So if I was paid $1 in Bitcoins, and Bitcoin is worth $20,000 today, in the eyes of IRS, I got $20,000. For instance, if you received 5 Bitcoins for certain services you provided or something you sold at a time when Bitcoin is worth $20,000, you must report 5 times 20, $100,000 as an ordinary income and pay income tax of it. Now, say 100 days later, you decide to sell one of those Bitcoins, and Bitcoin is $25,000. Your base is 20. You had a capital gain of $5,000, which is a short-term capital gain, and you have to report that. Say after 500 days, you sell 2 other Bitcoins. When Bitcoin is $30,000, your base is still the same. Now your capital gain will be $20,000, and it must be reported as a long-term capital gain. So that's how simple it is. Bitcoins are treated as property. Just to recap, if you buy a Bitcoin and you sell it within a year, you must pay tax if you had any gain between the from the difference between the sale price and the base. If you had a loss, you can deduct up to $3,000 from your taxes. And if you kept the asset for more than a year and you had a gain, that will be taxed as a long-term capital gain. If you're paid in Bitcoins, you must report that as income at the rate you the day you receive the Bitcoin. And then if you decide to sell that, you must also pay a capital gain tax depending on how you pay that and whether you had any income. Thank you very much. And I'd like to give credits to Pixabay for awesome pictures and Canva for platform.